Good morning, this is Rich Nelson with Allendale with a special update for you guys. Today's video, of course, the bulk of it will be discussing the today's report from USDA, the February 9th, 2017 supply-demand report. But before we get to this, let's actually point out as a reminder, Allendale holds monthly webinars, and this next one up for February 28th will be with a special guest, Jeff Cooper of the Renewable Fuels Association. Let's get to the bottom of this issue regarding the RINs going on, ethanol pricing, what the current administration may be doing as far as ethanol, biofuel policy, and all those type of exciting issues here. So February 28th, we encourage all of you guys to sign up via our website. It'll be sectioned right in the middle of the website itself, or take a look at our daily wake-up calls. We include interesting points there as well. You can also sign up by calling Allendale 1-800-262-7538 directly and get signed up that way. And as a reminder, these are webinars held electronically. You can listen to them and also see the slides and hear the conversation from your own home computer or office computer there. Now, as far as today's report from USDA, typically the February report is not a big one, and really for the most part, today's trade didn't have any major surprises either. Now, as far as corn, USDA did lower corn ending stocks from their January report. They lowered them down from 2.355 million bushels to 2.320. So a 30 million bushel drop out of ending stocks. This came from a 25 million bushel increase in corn for ethanol and a 5 million bushel increase as far as the other industrial category. So a total of a 30 million bushel drop out of ending stocks. As a reminder though, USDA still needs in front of them to raise exports at some point in the future, but we still have this looming problem of feed residual. USDA won't address feed residual until we finish up with that March 31st grain stocks report, that quarterly grain stocks report, and that will be reflected on the April supply demand report. So in other words, we have artificially low looking corn stocks and an artificially bullish looking corn market here based on these numbers itself for the next couple months. It won't be till April that USDA really hits the hammer down and reminds us that feed residual is a problem. As far as world numbers on corn, actually, that was also a little supportive for today's discussion as well. We did see some moderate production increases for a few areas across the board, but really as far as the trade's focus, USDA raised the China demand factor by 2 million tons. That actually, combined with a few other demand changes, that did lower the world corn numbers from 221.0 million tons to now 217.6. So lowering U.S. corn stocks and lowering world corn stocks is the message here. Now, these aren't major drastic changes. These are mildly bullish numbers to speak of. And this also comes on what could be a moderately bullish new crop picture as well. So we do expect higher prices for corn to continue in the short term, and we'll be getting more aggressive as far as hedges later on at higher prices. As far as soybeans, USDA made no changes to the U.S. Balance sheet. Surprisingly, the trade was expecting USDA to raise the export numbers on this report and therefore lower stocks from 420 to 410 million bushels. Since USDA did not change it, the trade's calling this a disappointment. As a reminder, Allendale did point out on this morning's AM Grain Essentials page that we do not feel USDA needs to raise their soybean export numbers. That was laid out in detail on that report. As far as the world situation on the soybeans, well, USDA did lower world stocks from 82.3 million tons to now 80.4 million tons. As far as changes, Argentina was lowered by 1.5 million tons. That's a pretty moderate decline. Keep in mind, the trade talk just a few weeks ago was 3 to 7 million tons. So 1.5 is not a big drop. As far as Brazil, that was left unchanged at 104. The trade's probably going to look at this Brazil number and say that's actually quite a bit surprising. Keep in mind, a lot of people are suggesting that this Brazil crop is maybe in that 105 to 107 million ton range. So the fact that USDA lowered stocks as far as the situation on the world end, they might call that more or less a neutral to slightly positive issue, which more or less equals out and cancels out the lack of decline on the U.S. balance sheet. As far as U.S. wheat numbers here, USDA did drop stocks actually pretty good, about 53 million bushels. They went from 1.186 million bushels to now 1.139. They did raise exports by 50 million bushels. I really can't disagree with that too much here. And they did raise the food numbers, wheat for food, by about 3. So U.S. side actually not too bad here, and helping to support the trade here today. Also on the world end, USDA did lower world stocks from 253.3 million tons, now 248.6 million tons. So lower wheat stocks in the world, also lower wheat stocks on the U.S. situation. So for today's reports, this was a slightly positive report for both corn as well as wheat. The trade, we'll call this unreasonably a slightly bearish report as far as soybeans. If you have any questions about markets, marketing, on all kinds of issues ahead here, please feel free to give Alan a call here, 1-800-262-7538.